Hello, and welcome to a brand new episode of the Transfix Take podcast, where we are performance driven. It's the week of March 22nd, and we are bringing you news, insights, and trends for shippers and carriers from our market expert, Mr. Justin Mays. Mays, we're finally in spring.
Hey, Jenny, great to be back with you as well this week, and I cannot be happier that we are now driving through spring.
Yeah, seriously, I'm hoping we can put all of that weird weather behind us. But Mays, my question to you is, are we springing forward into good news? What have you got this week?
Well, Jenny, I'm going to sound like a broken record, and I'm going to repeat what I've said the last couple of weeks. At a national view, we're continuing to see the freight market see a slight decline in rates, with tender rejections remaining somewhat stagnant. Now, we are approaching the end of Q1 and the end of March, so we may see some pressure in the next week and a half. I really don't think it's going to be noticeable with where we are with capacity.
You know what, Mays? That may change. We are going to keep a close eye on this potential storm that is going to be a significant amount of rainfall, or predicted to be rather, in California in the middle of this week. And then don't forget, from Sunday, Sierra Nevada area is still dealing with that heavy snow that they received this weekend. That said, this could also impact California's produce season, which is slated to start pretty much at the beginning of April, which is just a couple of weeks away. Mays, what are you thinking on produce season right now?
Well, Jed, I definitely do think that over the next 3 to 4 weeks, we will start being able to gauge how impactful produce season will be, as many are already speculating that we will most likely see a weaker produce season due to the storms out west. But I want to keep in mind that we're already starting to see signs of the produce season kicking in and bringing volatility into the south and southeastern markets. So it's definitely something we're going to keep a pulse on and report back next episode.
Okay, Mays, now we've gotten weather out of the way. Another big important factor that we need to look at today, rates. Where are we at?
That's right, Jenny. We are still seeing rates nationally see a slight decline. They started last week at $1.67. They're now down to $1.63 is where we drove out of last week.
And where do we stand this week?
This week, I think we're going to continue to see that modest decline in specific regions that I keep calling out. The West Coast, the Midwest, the Northeast. But we're going to start seeing the rates incline, and we saw it last week, in different markets throughout the South and Southeast. This does definitely have to play into produce season. Now, nationally, tender rejections are right around that 3.6% mark and have been for about 2.5 weeks. But when you dive into the numbers a little more, you start seeing why I keep calling out produce season. Because tender rejections are actually ticking upward in the South and Southeast, but continue to fall pretty rapidly out west due to the surge caused by the bad weather, and we are starting to see the Northeast and Midwest open up. More so the Northeast, as tender rejections have come down quite a bit along with rates. But I do believe in the coming 2 to 3 weeks, the rates out in the Midwest and tender rejections will both decline, as we see the opposite effect in the South and Southeast.
So this is gearing up to be a really interesting and unpredictable produce season. I mean, what's new in the supply chain, right? And that could impact the carriers, which is interesting as well.
That's exactly right, Jenny. A lot of these carriers, especially the smaller and mid-sized carriers, are really hoping for a strong produce season to kick some pressure around, because ultimately, if we do not see some volatility or pressure to the spot market brought on by produce season, the next opportunity that carriers will have to put some pressure on the spot market overall will be DOT week, and that's not until mid-May.
That's right, and this year it is Tuesday, May 16th until the evening of Thursday, May 18th, and what usually happens is carriers stay off the road, tender rejections increase, and the capacity gets tighter. And that could be the market swing that carriers are looking for, but we won't know until we get there. Mays, you know what it's time for? The regional breakdown. Why don't we get started in the Northeast?
Over the past week, the Northeast has seen continued loosening, even though we witnessed some winter weather. But this week, I do believe it's going to continue down that path. We're going to see tender rejections continue to decline, along with spot rates. And when you double click into the Harrisburg, Pennsylvania market, which is one of the largest outbound markets by volume, you see that there's a sizable deduction in the amount of freight that was moved out of that market last week, which will bring overall softness to the entire Northeast.
All right, and what's going on over on the Midwest?
Very similar. This week, weather looks clear. And although rates have not declined as much as I would have anticipated the last 2 weeks, I do believe this week we're going to see the decline and spot rates pick up speed as capacity loosens. Along with this, 10-day rejections will start seeing a mild decrease as well.
So that'll be an interesting market for carriers, but why don't we move on over to the coastal region?
This region showed a lot of loosening capacity last week. Rates moved down faster than we saw the previous couple weeks, and this will continue this week. Freight out of the coastal region going down to the southeast is going to be in heavy favorability for shippers.
And how about the opposite side, the southeast?
This is a region that we continue to keep an eye on, as it is one of the first areas where produce season usually sparks some volatility.
Okay, and so what are we looking at this season, Maze?
Now, I will call out the Atlanta market, which is one of the largest, if not the largest, outbound market by volume, saw a slim decrease in overall volume outbound. But again, Atlanta is not where we're keeping an eye on to watch volatility. That's going to be Florida. And markets in the southern part of Florida are continuing to see a little bit of an increase in tightness, but nothing too alarming yet.
And I would say we still have until maybe mid-May, because a lot of the crops that come from there, strawberries, oranges, tomatoes, etc., aren't really in season, so to speak, until spring, summertime. But what about the South, Maze?
This is the other region that we really need to keep a close eye on, because we are seeing a little more of a volatility along the border due to produce markets, most likely. Now, Dallas, like I mentioned earlier, is also showing the same trend as the Harrisburg, Pennsylvania market, with a pretty measurable decline in outbound volume last week.
Which makes tons of sense, but why don't we wrap up this breakdown with the West Coast?
Now, the West Coast, again, is going to be going through some pretty significant weather over the next couple of days, but ultimately, I do not think that we need to be too alarmed when it comes to capacity within the West Coast. We continue to see rates drop pretty fast after a couple of weeks of inclement weather. I will note, though, that the Los Angeles and Ontario markets, which again are some of the larger markets in the country for outbound volume, saw an increase last week. Now, this isn't a trend with multiple weeks behind it, but it is something to keep an eye on. But I do not believe it's going to continue, to be quite honest, Jenny.
So this is going to be a really interesting couple of weeks, Maze. Do you have any advice for our shippers that are listening to the show?
Freight going into the south and southeast right now is where shippers should be looking to drive down rates. These are favorable lanes for carriers because they know if they go down south and southeast, they're going to get higher rates leaving.
So it looks like we're obviously seeing a overall decline in rates across the board, Maze. But I guess my crystal ball question to you is, how much lower can we possibly go? And I know that we addressed this question a couple of weeks ago, but I really need to know now.
I will say that I do believe, again, that we are near a bottom in the southeast and south due to the volatility that produce season usually brings on. But the big factor there will be how much volume comes from produce this year.
All right, well, a lot to look out for over the next couple of weeks into Q2. I'm really hoping for some type of volatility and a really strong produce season, as we haven't seen one in a while. That said, we will see you next week with an all-new episode of the Transfix Take podcast. Until then, drive safely. All views and opinions expressed in this podcast are those of the speakers and do not necessarily reflect the views or positions of Transfix Inc. or any parent companies or affiliates or the companies with which the participants are affiliated, and may have been previously disseminated by them. The views and opinions expressed in this podcast are based upon information considered reliable, but neither Transfix Inc. nor its affiliates nor the companies with which the participants are affiliated warrant its completeness or accuracy, and it should not be relied upon as such. All views and opinions are subject to change.